Good morning, Akiko. No, I don't think so. But I think what really happened is they had planned for 3 next year. It looks like they're going to drop to 2. So again, there's more of this free money, borrow your way out of debt kind of strategy that they're continuing to use. And I think that's why Powell is going to be the next Fed chair, because he fits in the same mold as Bernanke and Yellen.
So given that report coming from the Journal that Jay Powell is likely to be named the next Fed chair on Thursday over in the U.S., does that change your view on the Fed cycle at all?
No, I think it, in fact, I think it actually makes me a little bit more concerned that they may even remain dovish for longer. I don't think this is the right choice for the economy. I think that we need somebody who's going to be a little bit more hawkish, that wants to raise rates a little bit more aggressively. I mean, if we are going to get small business growing, it can only come from borrowing money, and without banks lending because of the lack of liquidity and the too tight of a spread, we're not going to see that. And I think you saw part of that today in the Russell. You know, the Russell had a collapse from making new highs, reversed totally, and was down pretty big on the day. So that's a big concern for small business.
Yeah, Todd, interesting to see the dollar also pulling back on talk that Powell will be taking the top job. Who do you think should lead the Fed then if he's not the right pick?
Well, I would have thought Taylor would have been the right pick. He's more of a hawk. I don't know that I like the choices that were given to me. I'd like to see Stanley Fisher, Richard Fisher from Dallas. Of course, he's retired, but I think that we need somebody who's a little bit more hawkish now. If we're truly getting the data that they say we're getting, and if we're truly getting growth and good jobs, then there's no reason why we shouldn't be able to raise rates here and actually let the economy stimulate. Because it appears to me there's even some problems with the new tax plan. So it doesn't seem to be so pretty as we look at it, even though they keep telling me how great everything is.
When you have a look at the data in the US, the Fed also weighing in on the situation when it comes to the labour market, saying it continues to tighten. The outlook on inflation mostly staying the same, though. It really does beg the question, what are we expecting out of the NFP report on Friday, and especially after the impact of the hurricanes? Would you expect to see an additional strengthening in those numbers?
They're looking for a really big number, and I could see a big number. The real problem I have with the number, though, is not how many we get, it's how many quality jobs we get. How many are in manufacturing, how many are making more than the minimum wage, and how many are not service jobs. You know, we have a 4.2 unemployment rate right now, but the problem is that the people aren't making more money. They're making less money than they were 20 years ago. So the overall picture does not look good, which is why we see so many problems in retail and everywhere else around, because the average American is not making enough money to pay health care and do everything else that they need to do. And that is the bigger problem. So the number is really not important. It's really the quality of jobs that we're going to get. And that means we need these companies with these great earnings to quit putting the money in their pocket and start doing some CapEx spending.